Ah, hello again, Internet. So nice to see you. I hope that you're enjoying this day wherever you are, whatever the climate is like, and the weather wherever you live. If it's a wintry day by you, I hope that it's a good one. Out here it's relatively pleasant compared to many places in the northern hemisphere. And it reminds me oh so very clearly about what wild winter weather brings and gives to those who are paying attention and making the most of the opportunity. See, one of the things as a trader that I enjoy are bear markets and pullbacks in bull markets. What does that mean? Well, as a VEPS trader, there really are no VEPS, bear or bull markets overall. There's just continual movement through the VEPS from one moment to another. Of course, you can say, well, overall the market is moving this way or that way. Yes, on higher time frames, you can look at that and say those things. You can also say that on higher time frames, generally speaking, it is always on the upside because of drift, which tends to go up over time. And that is why prices tend to go up on assets over time. It's not just by accident. Some of it is due to things like inflation. So as the dollar devalues over time, or any fiat currency, that currency's asset pegs will naturally cost more of that currency over time, right? Because people are spending more of that currency to buy goods and services, right? For the same amount or less than they purchased previously. And that is a function of currency devaluation, as much or more than necessarily price inflation, which is obviously tied to that. So then why is it that I would like bear markets or downward movements in returns and price action? Well, if you know anything about trading the VEPS, if you've been following my videos or those of alpha trading, then you know something about how the returns work. Say it with me, folks. Returns mean revert, and price action follows the returns, right? And the price action is determined by the volatility, which is the standard deviation of returns. So why would I like it when prices fall and when returns are dropping or returns are increasing to the downside? Well, personally, I like to buy low and sell high, just as you're supposed to do. So when returns are falling, price action follows to the downside. It gives you an opportunity to acquire more assets at a discount. And when you have big outliers to the downside, as we saw yesterday on Bitcoin, for example, it's an opportunity to purchase the asset for cheaper than it was before, just the day before. And what does this mean? Well, it's an opportunity because when you have outliers to the downside, following those massive moves, you typically get, and normally so, you get mean reversion. Now, does mean reversion have to be the upside or the downside or sideways? Yes, it can be any of those things. Right? Mean reversion can happen in continuance or in reversals. It doesn't have to be one way or the other. So to try to say, well, if it's mean reverting, it has to go the opposite direction, is just plain wrong. However, the returns will still mean revert. Now, how can it be that if price action is following the returns to the downside, after a big fat outlier, the mean reversion might still happen to the downside? Well, because if the mean continues to fall and the price action returns to the mean as it's falling, then it can easily happen to the downside. Right? The price action might be dropping at a lower slope than the returns are falling, and that the mean of returns are falling. Therefore, it can intersect with that mean even as both are falling at different speeds and at different slopes. So that's what I mean when I say I like down markets. Why? Well, because first of all, I like to sell when we have outliers to the upside, and then buy when we have outliers to the downside. You might say, well, that's kind of front running. It can be a bit dangerous. Well, if you're trading very low time frames, you'll see that the bigger picture is made up of what's happening on the very smaller picture. And the moves on the very smaller picture are determining what will eventually become the bigger picture. So even as the gravity, or the gravitas, I should say, of the bigger picture is heavier and bigger or weightier, more meaningful, has a higher probability of occurring, in one sense, than the small moves on the downside, on the low time frames. It is the low time frames where the changes begin. So the fast moves happen on the lower time frames because the returns are constantly zigzagging back and forth across the means, first on the lower time frames, and then only eventually on the higher time frames, which obviously move slower. So, to me, I see lots of opportunity every day, not just once in a while, but every day, that allow low time frame scalpers to fill up their little buckets of liquidity, dipping their buckets into the liquidity stream, and then pulling their liquid-filled buckets out of the stream quickly and stacking them quickly and rinsing and repeating, because it is a lot easier to move little buckets without the worry or risk of slippage and losing a good chunk, if not all of that liquid gain, than it is to try to stay in a trade for a relatively long period of time, be it hours or days or longer, when your bucket might be bigger and filled with more gains. However, slippage and things like volatility can come and reverse your fortunes at the drop of a hat. So, with that said, I wish you much happy trading. I hope that you make the most of not just the wild winter weather, if you happen to be so fortunate as to have some. Enjoy it. In the summer, you'll miss it, right? And remember, the opportunity for greater gains exists when you buy low and sell high, rather than instead of when you try to somewhere in the middle buy and sell, where your gains may still be nice, but it won't be nearly as nice. And if you do that on low time frames, constantly back and forth, not really caring about the direction, but just realizing the opportunity is to buy low and sell high, then that will be of much more reward to you over time. You fill up those little buckets on the lower time frames. Rack them, stack them, rinse and repeat. All right, that's it for now, folks. Happy trading. See ya.